I've spent the better part of this year studying the pandemic because I thought it really held the key to the market, at least for most of the professional money managers out there. And that was right. But you know what we've discovered? The professionals are no longer the only cohort that matters. We've got a massive group of individual investors who become, in many ways, a more powerful collective force than the professionals. And they simply don't care about the same things as the experts. And they're the ones who are the marginal buyers and sellers of stocks. The return of the individual investor has changed the entire character of the market. Ever since the dot-com collapse in 2000, the dialogue surrounding every rally was framed around what could go wrong. What made you not be able to sleep at night? There was very little belief in stocks as an asset class. For the past 20 years, the conventional wisdom said stocks could no longer be trusted. They all trade together as a unit, which means they can tend to lose their value way too quickly when something goes wrong. That thesis only grew more convincing after the financial crisis. On top of that, the conventional wisdom insisted that only a fool would try to pick individual stocks. Too easy to be wrong. But you might as well stop trying to beat the market and just put some of your money in an index fund and park the rest in safely in bonds. In the last 8 months, though, that conventional wisdom has been stood on its head by a new generation of investors who came of age after the rise of commission-free trading.
Hey there, Lincoln here from BoAcademy.org. Tonight I want to talk to you about what Cramer just said on CNBC's Mad Money. And I know that I've been hard on Cramer in the past, and like I said, I have nothing against the guy. I just think independently. I see what's right and I see what's wrong, and I judge it for what it is. And Cramer has said some wrong things in the past, but sometimes he gets it right. And tonight he got it right. He was just on air saying that the retail investors got it right and the cynical institutional investors probably got it wrong. And he went on to say that it may be time for those institutional investors, for Wall Street, to stop fighting us, to stop calling us dumb, and to just join us because we're getting it right. We're doing the right things, and we're picking companies that we understand, believe in, and plan to hold for the long term. Because it's not that complicated. Wall Street makes it very complicated so that we can stay out. They used to charge commissions just to trade stocks, and now that's gone. That's one barrier that's gone. Then there was the information asymmetry. They had all the information and we had no access to it. But then came Google, and Google said, hey, we're going to organize all of the world's information and make it generally accessible. And now we've learned how to Google. You can learn how to be a software engineer on Google, and you can learn how to trade stocks on Google. Step by step, every year, we're tearing down that wall of information asymmetry, which is one of the biggest barriers to entry into investing. The lack of information, the asymmetry of information. When somebody else has more information than you, and you have no access to that information, or you have the wrong information, they have a much better chance at success than you will ever have if you never have access to the information that they have. That's why our country outlaws insider trading. Because when you're inside a company and you have all the information, or you're close to insiders, and you trade on that information, you're definitely going to do better than everyone else because information is king. That's why SPACs, special purpose acquisition companies, are so important for retail investors. If we can get the information early and get in early on those SPACs before they make their announcements or right before they make their announcements, we stand to benefit greatly over those who did not have that information because we can invest earlier and with better information, with better confidence. And then as everyone else finds out about that company, that SPAC and their target, the stock price will rise and we can benefit from the appreciation of the value of that asset through the merger. And over the years, those first few months that we got a head start on, it's very important. That's why it's important to watch the market, to stay up to date on what's happening in the SPAC land. Retail investors understood this from the start. That's why we've collectively made so much money this year, betting on companies that we believe in early on, their managers, their sponsors, and saying, hey, go out there and find a company to take public and make it a good one. Make it clean energy. Make it future tech. Because we retail investors, we also believe in the future. We believe in the future of technology. We want to see gasoline cars go away. We want to explore space. We want to own companies that have their revenues mapped out and recurring as SaaS companies, software as a service, where our companies know how much they're going to make every month from their customers because they build once and they charge repeatedly. They charge over and over again. We believe in the future because we've seen the past. We've seen how fast technology changes. In the past, someone would have told you, hey, don't build an airplane. What is that? Don't build a car. Give me a faster horse. Don't build a car on batteries. What is a Tesla? That's never going to work. What's the internet? That's going to die out in a few years. What's a Google or a YouTube? What's Facebook? How do they make money? That will never work. Who's that kid running the company? Zuckerberg? What an idiot. He'll never make money. You're going to store data in documents? MongoDB? That will never work. We have MySQL. We have Oracle. We're good. We don't need you. What's a Snapchat? Messages that disappear? That will never work. How do you monetize that? What's a TV? People are going to get bored watching that. What's an iPhone? How do you make money off of that? Apps? What are apps? There's too many of these apps. What's going on here? So we've seen this over and over again. And every time there's disruptive technology, whenever things are changing drastically, the people from the past, the older people who've been around and seen too much, they've lost their imaginations. They fail to imagine a future that's vastly different from the ones they have today, from the ones they've had in the past. So they miss out. And because they're afraid of missing out, they want you to also miss out. And they call you dumb for believing in a different future. And while that future is being built, they try to keep things complicated. They try to hold on to commissions. And Robinhood said, no, there's a better way to do this. We don't have to charge people to trade stocks. So now more people can invest in the markets. And that's going to be better for all of us. So more retail investors came in, and the money manager said, hey, don't pick your own stocks. That's dumb. Let me do it for you. Invest in index funds. I'll keep your money safe. You'll get 6% a year. You'll get 10%. That way, you won't lose money. But I'll charge you 3%. That's fair, right? And we said no to that. We said that's dumb. I don't want the good and the bad. I just want the good. And I know enough to pick what I think is good. I can go on Google and research it myself. So we go on Google and we say, what's hydrogen fuel cells? And we do the research, we look into that. We say, how do electric vehicles work? How do batteries get built? Which minerals are used to make batteries? How hard is it to source these minerals? How sustainable is the process? Is this going to make a better future for all of us? And can we make money on this? Can this be profitable? We know the right questions to ask. And so, because we have Google, we can get the right answers. And information asymmetry gets diminished because we get that information that we need to build convictions in the companies that we believe will build the future. That's why we love Cathie Wood, because she said, hey, information asymmetry is bad for everyone. We're going to hire smart researchers. We're going to do all the research and make it public. That's why Elon Musk of Tesla said, hey, patents should be free. Everyone should work together to build up the EV future. And so as retail investors look at that and say, hey, that's good. I like that Tesla guy. And because of him and his team, we got NIO. We got Helion. We're getting GM. We're getting everyone. And now we're getting SBE, Switchback Energy. And us retail investors can engage in that early on because we have the information we need to make up our minds. And every day we get more information straight to our smartphones. Remember those iPhone things? Those Android things that they said it would never work out? We have those in our pockets and by our bedsides. We wake up every morning and we say, hey, what's going on in the news today? Robinhood Snacks? I'll read that every day, every week. I'll learn what's going on in the market. I can think for myself. I can do a little bit of research, read some articles. If my company is doing well, I know that. If they're doing wrong, I know that. And if they consistently do right, I will stick by them. I will hold on. And I will benefit from the appreciation of the value of that asset over the long term. We also realize the power of compound interest. That's not complicated. We don't need Wall Street to tell us that. We know how wealth works. You invest today, get your gains, reinvest it, then compound it. Keep doing it 10 years, 20 years, 40 years. You'd be much better off than where you started if you just hold on. It's really not that complicated. So Cramer's right. We're here, and we're here to stay.
Are these younger investors merely looking at the world through rose-colored glasses? No. No, I think the rest of us are looking at the world through crud-encrusted, cracked lenses that make us feel beaten down and unsure, even when things might be going well. Now you got two choices here. You can stay negative and hope these new stock pickers get blown up, get their comeuppance, or you can try to learn from them, starting with the idea that buying a bond with a sub 1% yield is a waste of money and will get you nowhere. The bottom line, I think it's time to stop disrespecting the younger investors who've nailed 2020 every step of the way. Start taking them seriously. Even after this incredible run, it's not too late to join them.
The future of investing is retail. Retail investors will be the future of investing. The only reason we haven't been in the past is because of information asymmetry and the gatekeeping of the institutional investors. They put up a high wall to keep us out. They said we're going to charge you every time you want to trade, but we don't have that anymore. We make bets, and if we see them going wrong, we change things up. We reassess our investments, and then we make new bets, and we hold on for the long term, so long as we stay convicted in those companies. It's not that complicated. The barriers are going away. Information will only become more and more free and more abundant. All of the research that we're going to need will be available to all of us through people like ARK Invest, through Chamath Palihapitiya. They're doing the work for us, and they're making it public because they know that all of us will be better off with more information. Google will only get smarter. Twitter will only get chattier. There will only be more and more YouTube investors like myself trying to teach everyone else around us how to invest. And there will be more and more people like you who want to learn how to invest to build wealth for the future, to build long-lasting, sustainable wealth that will enable you to retire when you want and on the terms that you want. Not when you're 67 or 70 or never, because most people cannot afford to retire because they never get into investing because the big guys on Wall Street said, hey, it's too hard for you, little man. You can't come here. If you want to, you need this much money, and if you want to invest, you gotta pay me 3%, or you gotta pay me those commissions to make your own trade. Those days are gone, and they're gonna try to hold on to those days as hard as they can. I don't believe in Bitcoin, but I'm smart enough to realize that I don't know the future, so I hedge my bets. I say, okay, I don't think that this will work out, but if it does, good for you. Good for all of you. I'm happy for you. I'm just making sure I'm hedging my bets so that if I'm wrong, I will be able to build up if Bitcoin takes over in the future. But there's people from the past who are saying Bitcoin won't work because I don't want it to, and I don't believe in it, and it shouldn't work. And they're trying to put up walls to stop it, even if it's what's best for the future because it's too different from their old world. They aren't able to adapt. And so they try to keep all of us back. That's the wrong way. I may be wrong about Bitcoin, or I may be right, but I'm not going to try to stop it. EV cars. There were people who said EV cars will never work out, and they did whatever they could to stop it. And now look at where we are. There's people who say Hyperloops will never work, and they did whatever they could to stop it. And now look where we are. There are people who said that retail investors are stupid. They don't know what they're doing. They don't believe in the numbers that Wall Street puts out there. Their price targets and all their fancy numbers. It's not that complicated. It's a business. Do you make money? Are you growing? How fast are you growing? Will you continue to make money tomorrow? Okay, great. Here's some money. Go allocate it and make more money. What makes that complicated? People make things complicated so you can pay them to decomplicate it for you. So we don't need that anymore. That's gone. We don't need that. We don't need them to tell us what to do. We can think for ourselves. And we can lean on those good people who are doing the hard work, doing the good work for all of us. We can make up our own minds and build our wealth for the future. And that's all I wanted to say tonight. So I appreciate what Jem Cramer said, and I look forward to building this future, the future of investing, where retail investors lead the way, because we're doing that today. We've been right all year. All those billionaires took their money out and ran, and now they're going to come back chasing because they were too afraid to hold on. Remember, Warren Buffett said that the stock market is a vehicle for transferring wealth from the impatient to the patient. And when they are fearful, be greedy. And when they are greedy, be fearful. And that you cannot time the market. Time in the market beats timing the market. So we just invest in what we know to be right and what we believe will be right in the future, and we hold on. And as that is proven out or disproven, we reassess our investments, we continue to hold, or we rebalance. We exit and we enter new positions. That's all it is. So I look forward to this future, and I'm glad you're here on this journey with me. And whatever you do, remember to always practice the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term, because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. So if you haven't seen my video on my $187,000 growth portfolio that I grew from last year, 18 months ago, starting at $23,000 and adding in consistently over the last 18 months, I've grown my portfolio to over $187,000, over 300% year-over-year growth, and that is without index funds. That's without the dividend investors. That's without the money managers. We don't need them. You don't need them. We can do this on our own. So if you haven't seen that video, go check it out. You can see all of the stocks I'm investing in, and you can get more insight into my investing strategy. So thank you for watching this video. If you enjoyed it, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on what Jem Cramer said and what you think the future of investing will be like, whether or not retail investors will continue to drive the future, or if you think the people on Wall Street are correct, the institutional investors, that we're all dumb and we can't think for ourselves. And of course, if you want to help the channel grow and get more access to me and get direct answers to your investing questions, then join us over at patreon.boacademy.org. You'll be able to engage in our Discord channel where we share resources and discuss the stocks and SPACs that we're all invested in, so we can help each other build our wealth for the future. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. I'm Lincoln with boacademy.org. Thank you again, and have a great night.